Okay, great. All right, let's go find the solutions. And I will open them now. Okay. So maybe I can just write down. So we're doing, we have the quick study. Just tell me what I told you to do. Quick study 13, right? Yep. And then what? 2-4. Okay, exercise 4. 2-8. And 8, okay. 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 Thank you. You can't look at my notes. This is no small wonder I can't read them. Okay. Ooh. Okay, so on page 68, QS2-13 indicate the financial statement on which each of the following items appears. And your choice is income statement, statement of owner's equity, or balance sheet. So I'll just go around. Allison, I'll start with you. I'll call out the account. And I'm going to throw you a little bit for a loop just for reinforcement. I want to know what statement it goes on and what type of normal balance it has. Okay. So the first one is service revenue. So normal balance choice, the answer is either a debit or a credit. It is. Revenues are credit balances. Does revenue increase or decrease equity, Allison? Very good. Okay. Jacob, next question. Interest payable. So the hint is right in the name of the account. Payable is a what? Anytime you see the word payable in an account name, you know it is a what?
It is a credit.
It's got a credit balance for sure, but it just like in general, is it an asset, a liability, owner?
Considered a liability.
Anytime you see the word payable, you know it's a liability, and it's on the what? We've got 3 choices for financial statements: balance sheet, statement of owner's equity, or income statement. It's actually up there.
It would be balance sheet.
Okay, let's just go through this really quickly. What is the model for a balance sheet? That's okay. Balance sheet is 20 plus what plus what? Anybody? Assets equal liabilities plus owner's equity. Right? That was the very first day, accounting equation. You absolutely need to know that off the top of your head here at the end of week 3. Okay, next.
Is this under PowerPoint? So I'm not like.
Oh, this is the solutions manual for chapter 2, and it's I don't know, I think I have a topic area called solutions manual. But that's not, you don't need to find this. I'll have this up here. What you guys need to be doing is looking in the book at quick study 218 that you just did. Right? We're going through the homework. Okay, so I'll just keep going on. Sure. Next one. Accounts receivable. What kind of account is that? It is an asset. And how did you know that? It had the word receivable on it. Asset, and it shows up on the. And what type of normal balance does it have? Debit. Excellent. Dylan, salaries expense.
Salaries, expense. Income statement.
Excellent. Income statement. And what's the model again? Do you remember? For income statement?
Assets, liability.
That's balance sheet.
Oh, for income statement.
Yep.
Revenue minus.
Equals
Equals.
net income
Net loss.
or net loss. Revenues minus expenses equals net income or net loss. Excellent. So go on the income statement, what's its normal balance?
Which one was
Salary expense, I believe.
expensive?
Excellent. Expenses are debit. What do expenses do to equity? Do they make it go up or down?
Down.
Good. Okay, Hayden, equipment.
So assets and the normal balance.
Excellent. And it shows up on the, it does. Equipment is an asset. Assets have normal debit balances. And it shows up on the balance sheet because we know assets equal liabilities plus equity is the model for the balance sheet. Okay. Andrew, prepaid insurance. Okay, this one's tricky. What does the word, I think you guys used on your tool? There were four things I gave you. Listen, anytime you see the word prepaid, that should trip the trigger that is a asset. Why? Why is a prepaid an asset? I don't own the liability. I own the right to what? To be insured. If you prepaid your car insurance for a year, and the next month you get in a wreck and you go to file the claim and they're like, oh, dude, you're not insured. You're like, yeah, you are. You cashed my check for $1,800. Yeah, I am. You cashed my check for $1,800. You own the right to be insured. Okay, where does prepaid insurance show up? What statement? Does it? Where do assets show up? Assets equals liabilities plus owner's equity. It shows up on the balance sheet. What kind of normal balance is it about? It does because it's a asset. Okay. Are you with us now?
Yeah.
All right, cool. All right, no, you're fine. Let's just take the next one. So G, buildings. What kind of an account? You can just answer me without even looking at the, what kind of account is buildings if I go and buy a building?
Like owning the building?
Yeah, I bought a building. Is it an asset, a liability? Revenue and expense?
People get assets.
It's an asset, right? So what kind of normal balance does it have? Look at your tool. Assets have what kind of normal balance? Debit. And it shows up on the what? Balance sheet, owner's equity, or income statement. I think it shows up on the balance sheet. Assets equals liabilities plus owner's equity, and it's an asset. Just go through that process down 3 times. Okay, Lance, what's the next one?
Rental revenue.
Okay, rental revenue.
So it's revenue. It would be on the P&L, and it has a
Excellent. Revenue is right in the name. Revenue is a revenue account. Does it make equity go up or down?
Up.
Up. Got a credit balance, and it shows up on the P&L, which stands for what? Profit and loss. It's what we call income statement. Okay, excellent. All right, Roman, the next one, please.
Unearned revenue.
Okay, this one's tricky. Unearned revenue. Whenever you see that word, balance sheet is correct. I had you write down on your tool 4 tips for accounting. Anytime you see the word unearned, you know it's a what? Excellent. It's a liability. I've given you money and now you owe me something like a magazine subscription or a blog subscription or a year of bowling or whatever. Grizz tickets for the year. When Grizzly Athletic Association gets whatever they get, $3 million in the summer to purchase season tickets, they can't book all that revenue. Because it's not. Do they, here's a great question. So when they get that $3 million, does GAA take that to revenue over the next 12 months? Only during the season. What do we have, like 7 home games or something? Maybe 1 in August, a couple of September, a couple of October. If we go to the playoffs, blah, blah, blah. You get the point. Their bookkeeping is they take that unearned revenue, $3 million, and write off a little piece of it in chapter 4, when we learn adjusting entries out of the liability account and into revenue because they earned it in accordance with GAAP, revenue recognition.
So they're only gonna like book that money if it's a home game. If they're away, they can't consider.
Well, we don't sell season tickets for home games. That's a whole nother, or I'm sorry, for away games. That's a whole nother revenue stream, isn't it?
Well, yeah, but like if they're like travel expenses, maybe.
Oh, sure. I mean, they can, sure. The money, that's what I'm trying to separate in your mind. The cash and the revenue on the books are two very different things, aren't they? You get the cash in July. You don't earn the revenue until the season starts. Okay. And what kind of balance does unearned revenue have then? If it's a liability? Credit. You ever see that on their tool? Okay, good job. Jen.
So where does that one belong?
Balance sheet. Yeah, it's a liability. Yep.
Office supplies has a debit and asset.
Balance sheet or
And
income
all
statement?
his balance sheet, and so he is.
Yeah. But for right now, we're just stopping with the first statement, because some of us are still like trying to grasp that. Yep, it's an asset and it goes on the balance sheet. What type of normal balance does it have? Asset. Okay.
I saw it was interest expense.
It just take the last two at the same. Interest and insurance expense are treated the exact same. So go ahead. What type of balance?
Can you repeat that?
Sure. The last two is insurance expense and interest expense. So they're going to be treated the exact same way.
Okay.
What kind of account is it? Right in the title. Interest expense, insurance expense, what type of account?
Would be on the income statement and on the P&L.
Okay, so income statement and P&L are the same thing, right? It's an expense, it's right in the title, and it almost feels like a trick question. Revenue is what type of account? Revenue. Interest expense is what type of account? Expense, right in the title. Okay, and what kind of normal balance does interest expense or insurance expense have? Debit, and does that make equity go up or down? Great, okay.
I was confused. I thought it was interest on like an account payable. So take away your cash, but your account payable would stay. Is that what we're getting into in chapter 4? Is that what you, like sometimes one transaction can affect multiple accounts?
Okay, great question. We're booking transactions when they occur, but then in compliance with GAAP, we're going to need to adjust our accounts every month or every quarter or every year, depending on how often I file. Yes, that is what I'm alluding to. And my apologies, I've got like name dyslexia. It's horrible. Okay, Veronica, what are we on? E4, page 69. Okay, so, and if you want to go, now the solutions manual for chapter 2 is open. If you need to go work more problems, go do it. It's up to you to get to the point where you can see what we should be conversant with now, right? Okay, so in this one, E2-4, identify the item that best completes each of the descriptions below. Do you have your book in front of you, Veronica? Okay. Okay, so if I can put this up here. There are ever so many things to manage. So it's like a fill in the blank. What little thing was I using up here again? And where did it go? Oh, here it is. Hovercraft. Okay. Number 3. Identify the item. Balance sheet accounts are arranged into what? Oh, thank you. Number 1, a what of accounts is a list of all accounts a company uses, not including balances. Okay, a chart of account looks like what, you guys? Is there numbers on it? No, it's just a laundry list of all the accounts that that business uses for that point in time. Okay, and we'll have numbers as in like, you know, 101, 102, 103, the number of the account, but there's no balances in it. Yeah. So, so again, T account, let me just say this one more time, because this is just a little confusing. A T account is what? What do we use T accounts for? They are our general ledger accounts, but we just use them for a tool. They're easy to set up, and we can just put in our pluses and minuses and start working on it. But in reality, a general ledger really looks like that whole thing that I drew out with a debit, credit, balance, right? But just, we're not going to sit and draw those out for every single account. But that's really what a general ledger looks like. So to answer your question, behind the chart of accounts, Andrew, yeah, everything would have a general ledger account part. Okay. Let's see, where am I back on? No, number 1 is 1A. Confusing. A is 1, a chart of accounts. Okay, B, Allison, the what is a record containing all accounts used by a company, including account balances. Okay, what do we use a journal for? Does that have our balances in it? Okay, maybe we should go through this one more time. Let's just go through the process really, really super quickly. So I'm sitting at my desk. I'm the bookkeeper for the tattoo company we were talking about. I get a whole bunch of stuff in my digital inbox, my real mailbox. What are those called? All those documents and prompts and things that are happening. Yeah. So I take my source documents and I analyze them. Is every single one of those going to be recorded in my books? No, of course not. Only if they have a financial ramification. Then what do I do with those once I've analyzed them? I do, very good. And then I record them, which is called journalize. True or false? A journal is a chronological document that compiles financial transactions. True, it's chronological. Okay. There's no balances in the accounts, are there? It's just a chronological recording. Well, gosh, I want to know how much AR I have today. Like, how much money do people owe me? Can I go into my journal and find that? I mean, I could, I guess, if I sat there and added everything up, but I'm not going to do that. Where am I going to go to find that? The general ledger, exactly. What is the act called of moving the transactions from the journal to the general ledger? I've got my general ledger and now I'm going to do what to the journal. I'm now going to do what to the ledger. It is transfer, but we call it post. And before I can jump in, so what am I ultimately going to use my general ledger for? Okay, well, so now I've got all the accounts. What am I going to produce with them? My financial statements, exactly. But before I can do those, I've got to run a trial balance, which just makes sure that my debits all equal my credits, because what's the point of launching into financial statements if I'm out of balance? And then I prep financial statements. I think on Thursday, we're gonna have a quiz. I think we're gonna, one more time, or Tuesday, excuse me. Tuesday, today's Thursday. I think on Tuesday that you're gonna need to be able to show me the process, which we just did. All the models. And you're gonna have to spit out your tool sheet. In other words, draw me a T account of a liability and what's the normal balance, and draw me a T account of owner's draw and what's the normal balance. And then I'm gonna have you make a couple journal entries. No, nope. I've been saying learn it, learn it, learn it, and now it's really time to learn it. Okay, so that's what we're gonna do first thing on Tuesday. Half hour. Thursday, we'll review for the test, and the first test in here is on September 28th. Is that right? Sorry, let me make sure that that is correct. Yeah, first exam in class 928. Chapters 1 and 2. Also, the special practice set, which is on Connect, I'm sorry, what do we call it? Yeah, Connect, is due on the 25th. And we'll have one of those special practice sets due every 2 chapters. And that hopefully will be part of the prep to get ready for the test. Go ahead. Chapter 1 and 2 is on this first exam. Is chapters 3 and 4. Yep. And exam 3 is 5 and 6. And then I think I honestly ran out of time to test 7 and 8. So we have, and instead we have a comprehensive final in here, which really accounting is all building block. It's not like, oh, forget everything we learned in chapter 1. You can see it's building block. Okay, cool. Questions? As a side note, I've noticed that a couple of you have taken some of your free passes on reading quizzes or chapter homework. And just be aware it's a long semester. We're only in week 3. So use those judiciously. Okay. All right.
How do we use those? Did it email you or?
No, you just don't take it, or you take it and you get a 20% at the end of the semester. I'm like, oh, Tyler's lowest scores were blah, blah, and I threw them out.
We might as well just wait until the end.
You can, your strategy is your strategy. For a lot of people, it's like, sure, I woke up with my kid's sick. I can't do this today. Or I don't get this. That's probably not a good approach, because guess what? If you don't get something now, it's not going away. It's just building.
I would also add our weights are related. So if you get like a 20%, but it's only worth 10 points, well, you might want to wait for 5 minutes.
They're all weighted the same. Every chapter quiz is weighted, the reading quiz is weighted the same. Every homework is weighted the same in Connect. The special practice. Okay, I'll look at that afterwards. Moodle does some wacky stuff, but I've got it set up in Moodle so that the points are the same for each assignment. Okay, and I'll take a look at that with you because it is wacky. Okay, so let's see. So we were down here. So based on what we just did here, B, the general ledger is a record containing all accounts used by a company, including account balances. Let's see. C describes transactions such as that's 5, source document. D, increases and decreases in a specific asset, liability, equity, revenue, or expense are recorded in a for account. And E, the general ledger has a complete record of every transaction. So let me just bring this up. Sorry, those are a little bit obfuscatory. What number was that again? A journal. I don't completely agree with that, but okay. Well, yeah, I guess a journal is the chronological recording. I guess if you went back through it forever, you'd find everything that was ever recorded, right? Okay, number 8. Okay, so now we're preparing journal entries for the following transactions. Can everybody set up a journal on their own pretty easily? I mean, you don't need to do it right now, but like, what would, you're shaking your head, you can, what are the 5 column headings? Yeah, so the 5 column headings are date, description, PR for posting reference, debit and credit, okay? And we know our debits have to equal our credits. Let's see, I don't know who I left off on. I think Jake. So Jake, the first one on June 1st, T. James, the owner, invested $11,000 cash in Sustain Company. What's the debit and what's the credit?
The cash would be, if we go over cash debit.
Mm-hmm.
And we'll go under T-James Capital as a credit.
Excellent. So the asset of cash went up and the owner's capital account went up. Nick, the next one, the company purchased $4,000 of furniture made from reclaimed wood on credit.
On credit, we go to accounts payable, assets.
Excellent. Now, is my asset debited or credited? Look at your tool. How do we make an asset go up? I know you do, but just keep going. I know you do. That's why every time I'm going to say the same thing. Go to your tool.
You know, I understand. I just in my head, debit.
I get it. I've been teaching accounting for 30 years. You are not the first person that struggled with this. Believe me. Go to the tool. How do we make an asset go up? You debit it. What are we going to call the asset? What account name did you give it? No, the asset.
Oh, under asset.
Yeah. Let's call it furniture, right? It's furniture. Don't sweat the names, just call it what it is. Aside from the special ones I've given you, like receivables, payables, unearned, and prepaids. Okay. So you're going to debit furniture, and what are you going to credit? We debited our asset of furniture. What are we going to credit? Why are you crediting it?
Because it's crediting it.
The credit's the correct answer, but the logic wasn't right. You're crediting it because on your tool, you're like, oh, accounts payable is a liability. How do we make liabilities go up? right? How do we increase the liability? So every time, go to your tool.
Something I've been trying to remember.
Yes. Please.
If you know assets are always gonna be debit and your whole equation has to balance itself, you know, whatever the next category of the purchase is gonna be, or whatever. Gonna be credit.
Okay, so that works until this scenario. I pay a bill. What happens to my cash? Goes down. It's credited.
Yeah, exactly. So same concept. You, since it got credited, you know that whatever else you're gonna do has to be debit.
Okay, what if I exchange? What if I owe you money? I have outstanding accounts payable for a long time to you. And you're finally like, I've had it, Lisa. I want to sign a formal note. Now I'm gonna trade out my accounts payable for a notes payable. Does that touch an asset? I mean, your theory is okay, but as we get more complex, many transactions don't touch an asset. But, yeah. No, and if that works for you, that's great, but what, you know, sometimes transactions don't touch assets. Okay, next one, the company paid $600 cash for a 12-month prepaid insurance policy on the reclaimed furniture. Trevor, what do you think?
Assets got.
Which asset? Yes, they are. Okay, so read, do you have the book in front of you?
Yeah.
Read the transaction.
Company pays $600 cash for 12 months.
Excellent. Now, what happened to the cash, up or down? Went down. Yep. Okay, so debit or credit? Perfect. So I know I got a credit in cash. So I know I need a debit in something. What is it? What did I do with my cash? And anytime you see the word prepaid, you go to your cheat sheet, and that is a what? Yep. That's the other thing that's going to be on the test or the four special or quiz, I mean, for special accounts. You see the word prepaid, you just immediately know, Lisa, that's an asset. How do I make it go up? I debit it. How do I make it go down? I credit it. You see the word unearned, you immediately know that's a liability. How do I make it go up? I credit it. How do I make it go down? I debit it.
So that transaction doesn't touch anything.
Exactly. But the equation is still a balance.
So how do we know when it's gonna affect our cash and what's gonna affect our expenses?
If the word I got cash or I paid cash is in the transaction, it impacted cash. If I sell you my services on credit, is cash touch? It's got to say paid or received. Much like when you see the words on credit, that means you're going straight to what kind of account? Payable, excellent. Okay. Look at this. Let's see, who am I on? Dylan. Company billed a customer $3,000 for sustainability services provided. That's another like red flag word. I billed something. What does that mean? Yeah, so did cash transpire? No. So what do I do? Excellent. These are the words you need to start tapping into, and if you need to make notes and say that, boy, when I see billed, that means a receivable. When I see on credit, that means a payable. And then you know these four, right? Prepaid, unearned, what are the other two? Receivable and payable. Alrighty, Hayden, the company paid $4,000 toward the payable from the June 2nd furniture purchase.
We're gonna have payable for, you're gonna have cash and it's credited.
Okay, so stick with it. This is a perfect way because this is a little bit of a tricky transaction. The first thing that's easy peasy is it says paid. So I know my cash went what, up or down? Down. And I go to my sheet and I'm like, cash is an asset. How do we make asset go down? We credit it. So I'm going to go on my journal. I'm going to go to the second row. I'm going to indent it a little bit. I'm going to fill in my credit because that's easy. I know that. Then I'm like, oh my gosh, what's my debit? Go ahead. So why am I debiting my payable? Lead me through the logic using the tool sheet.
So the normal balance for payable is credit. And if you credit it, go up, and if you have more, pay off. But if you credit it,
Debit.
yeah.
You're totally on track. So I'm like, oh my gosh, I got my credit to cash. Now what's my debit going to be? And I'm like, oh, I'm not quite sure. And then I'm like, but I know it impacted my payables. I go to my tool sheet. I'm like, a payable is a liability. And it just went down. How do I make it go down? I debit it. Excellent logic. Okay, Andrew, where am I? The company collects $3,000 for services that they billed back on June 4th. Okay, just go ahead. Please. Okay. Can you shut the door, please? Thanks.
So I was thinking that we always put the asset first.
No, debits go first, credits go second. Debits first, and then indent a little bit, and then credits go. Okay, go ahead, Andrew.
So the cash is debited 2,000, and account receivable is credited.
Take me through the logic of why you credited AR.
Because the $3,000 they got. Wait, is this when they billed?
So they had provided a service, they billed the client, and now the client is paying them.
Okay, so yeah, their cash goes up, and then their cash is.
Great. Okay, and then finish the logic. The AR went down and AR is a what?
AR is a liability.
No,
Asset.
it's an asset, and how do we make assets go down? Because their normal balance is, you see how you just over and over and over and over, same pattern.
I'm sorry for asking.
No. That everybody learns from everyone's questions. That's definitely good.
The previous transaction we just did, we credited cash and debited our accounts payable. Well, let's do negative.
There is no positive or negative connotation. All there is, I don't know how to do this so that you can see this, Alex, sorry. So just imagine a T account. I'm going to put it on the board. An account is simply this. It's nothing till you put a name on it. Then you have to tell me what the normal balance is. What's the normal balance of this account? And I know that because it's a liabilities, and liabilities normal balances are. So pluses and minuses, I mean, it doesn't mean anything until you tell me what it is.
I understand that portion, but I think this is why I was getting cash and expenses, because in order to offset that, I thought the expenses would have gone up, showing your purchase. And then that company.
It depends upon what you purchased. Did you buy a building or did you buy a pencil? If you bought a building, you have an asset.
Well, that's why, because I was trying to keep it balanced by the plus and minus. So you don't have to do that.
The only thing you have to keep in balance all the time is the what? From day one,
No.
the accounting equation. It's that tool sitting in front of you, assets equals liabilities plus owner's equity. The debit and credit piece of this is just the tool that we use to do that. There's got to be some method.
So you don't have to have one plus and one minus.
Oh. Okay, did you finish answering the question?
One question.
Did you finish taking me through the logic of accounts receivable? I can't remember now. I think you did.
Yeah.
Okay. All right. Can you read the next one, Lance?
Yeah, is that, James invested in additional $10,000.
Okay, yep, so now our guy invested an additional 10 grand in his company. Go ahead.
So we're going to debit cash and credit.
How did you know to credit owner's capital?
Because it has a credit.
And you saw that because which of those 6 type of accounts is that on your tool sheet? Owner's capital or owner's equity? What does this do to the guy's equity in his company? Does it raise it or bring it down? Good. All right. Allison, you're on the last one. The company received 5 grand in advance to provide some sustainability consulting for a customer. Excellent. Why did you choose unearned revenue? That's the perfect answer. They got cash, but they haven't done anything for it yet. Therefore, right in the title, it is unearned revenue. What type of account is that? Excellent. Great job. Okay. Could you post these right now if I put up the T accounts? Post them. Let's set up a T account for cash and post them. You're going to need to make it pretty big because we've got a number of transactions, right? Grab just a couple pieces of blank paper for me to set up your T account and do all the things I showed you how to do. Label it, put your plus and minus where the normal balance is, write in your little debit and credit because we're still practicing. Thank you very much. And post and balance your cash account.
I actually have a question.
Go ahead.
So, when we post something on the debit side, when we go to post something on the credit side, we want us to like drop it down.
No, that's fine. Let's see. Let me, that's a great question. Let me just make sure that how your book does it so that I don't show you something that's, okay, so the way that the book does it is how we'll do it. What's my normal balance for cash again? So was the first one on the, what's the date? So they're doing it like this, or if there's just a transaction number, you just, oh, thank you. You just put the 1. If there are dates, sometimes they'll just give you transaction numbers, in which case you'd use that. And then when was that $600 paid out? 6/3? So just like that. Post your cash account, balance it out. I gotta go back and see what we got here. How do you find this little thing again? These dates might not be exactly right, but you get the point. Trying to go back and forth between two things here. No, that was opposite. Oh, I'm not doing a very good job here. Okay, let me just hold this up. So on the 12th and then the 20th and then the 21st and then the 30th. Okay, does this look roughly right? Okay. So on my debit side, what do I have? 21, 24, 29 grand. And on my credit side, I've got 4,600. So at the end of the day, do I have a debit or a credit balance in my cash? I have a debit balance. And again, sorry that I don't know exactly how they do this. I want to look. So what's my ending balance? In accounting, we double underline something when it's like finalized. All right, now guess what? Now I've got to do that with every single one of my accounts. I need to post to them. And then where am I at? Running a trial balance. This is not a financial statement, it's a tool, but we know that we start everything out with a heading that has how many lines to it? 3. Okay, so let's set up our trial balance.
So I started taking all of my accounts and separating them out. First, based on the.
If we were posting to everything, we would have done that, but I said just post to cash. Tyler?
If you run into a negative balance,
If I had a negative balance in cash, I would just have the balance over on the credit side. And you would be able to look at that and be like, wow, they're overdrawn.
then same thing with the other liability on capital.
You're not gonna ever have negative balances in them. Okay, remind me what a trial balance is again? Lance, what is it?
I don't know.
But just tell me like, okay, so I've got my 3-pronged heading. We know we always start with that. What am I gonna do next on my trial balance? Okay, how? What am I gonna write down? I'm gonna just list all my accounts. And I'm gonna put a debit and a credit. And I'm gonna write down the balance of every single account, and then I'm gonna balance it out. And I can't do my financial statements until my trial balance is in balance. See the process? Analyze your source documents. Journalize everything in chronological order. Post to the ledger. Run a trial balance. Now, I'm just totally, I don't want to take the time to do this, but I'm just going to make up some numbers. Say this is what it looks like. Okay, just a second. Write that in, balance the trial balance, and then set up your models for a balance sheet, an owner's equity, and a P&L. Let's see this all the way through. And in my super easy example here, I only have one revenue and one expense account. I did. Super, super, super easy example here. Cash, AR, AP, some capital, one revenue account, one expense account. Balance the trial balance. Take out a piece of paper and set up your 3 models for balance sheet, statement of owner's equity, and income statement. And then do them. And that'll take us probably a good 10 to 12 minutes. Okay, so go ahead. Who am I doing this for? Alex, and just take out a piece of paper, balance out your trial balance. Try and do your statements without looking at the book. You should know your models. What does the balance sheet look like? What does the statement of owner's equity look like?
Question.
Yeah. Yeah, always. There's 4 lines in the statement of owner's equity, always right off working down. Uh-oh. Did I do that? Yeah. Sorry, my bad. Oh. Wait. So what have I done here? 30, oh, that's gotta be, no, that's right. Oh, no, that's it. Yeah. Did anybody else discover that? You can't go, somebody should have been like, I can't do anything. My trial balance doesn't balance. Oh, geez. Thank you, Jen. Then you make your double underline, life is good, I can move ahead. Okay, what are the 3 things we have to do? What, and what? Income statement, statement of owner's equity, balance sheet. What order do you do them in? You've got to do the what first? Why?
You can do that one.
You can't do the statement of owner's equity without net income or loss. And you can't do the balance sheet without the balance and owner's equity, right? Mhm.
Numbers that you gave us?
Yes.
Or not the details?
No. You still need the balances?
If we like do a home, can we put on a bill sheet?
Of course.
All right, perfect. So is there only one liability?
Yeah. That's what I'm saying. This is super, 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 super simple.
That makes sure.
Yeah. Okay, we close to ready? Need like another 5 minutes? It's always zero if it's a new business. If it's not, you've got a balance in the general ledger that you bring from the last month over to the current month.
Okay.
Mhm. Were there any investments or draws? No? Oh, sorry, the $10,000. Yeah, my bad. Thank you. Takes a village. All right, let's take a peek. I journalized, I posted. All right, I got my ending balance in each account. Then I ran my trial balance. And it had to balance before I could move on. Now I've got to do my 3 statements. We know that the first one is the profit and loss. Trevor, why do we know that? How do we know that that's the very first one I've got to do? Thank you. I can't do anything else without, I don't know why I have to do this every time. Huh. No, that doesn't help. Oh, there we go. It's so random. I just don't get it. Because it had shot the Jägermeister? I don't know. That's not helpful. Oh, come on. I'm not going to sit here and hold that. Okay. 3 headings, right? 3-pronged heading, name of the statement, name of the company. If it is a P&L or a statement of owner's equity, what does it say? For the month ended, for the quarter ended, for the year ended. And this one's so simple, you can barely understand it. Normally you have some revenues lined up, some expenses lined up, right? Net income or loss, $5,000. What's next, Ron? What do you gotta do next? Yeah, statement of owner's equity. Okay. I'm guessing that one took you a little bit longer to pull the model out of your head. Let's just say it together. What do we start with? Beginning balance. If it's a new company, if it's not a new company, where do I get it? Allison came up and asked me, where do I get the balance if it's not a new company? You go to the general ledger and you pull up the ending balance from midnight the day before. But this is a new company, so it's 0. What are the 2 pluses that comes next on my model? Investments and net income. What are my 2 subtractions? Withdrawal, not expenses, close. Revenues minus expenses gives me net income or net loss. Right? So expenses in it. If it's net income, it's a plus. If it's net loss, it's a minus. We haven't had net losses yet. But you should know that if expenses are greater than revenues, what's that going to do to your equity? Profit. That is a net loss. And then you get to ending balance. I didn't look up the name of our guy or gal or whoever it is. I just put X, but it's his name. You know, T row, comma, capital, 6121, balance 0. Plus investment by owner. Net income or loss $5,000, so it went up 15. Didn't have any draws, ending capital 15,000. Balance sheet. Next, what are my 3 major categories on my balance sheet? Excellent. Okay, did you get to the balance sheet? No, okay. So this is a lot of busy work, I get that, but I wanted you to see the whole process. So I have 2 assets, right? Total them up, how much do they come to? Right? How many liabilities? Just 1, but normally we have a couple, right? So total liabilities, 10. And then owner's equity, you pull from the number you just did. So I guess I should make this clear. This number goes here. And this number goes here. And when I see that my 25 equals my 25, I'm running out of room, but I get to do my snappy little double underlining, which shows to me, yay, I'm done. Yep.
So I did, you know, for your revenue, Yes, you don't.
Where is my revenue and expenses on my balance sheet? Which is in my, ends up in what account? Capital. You see that? My revenues and expenses come together as net income or loss. That number flows into my capital account. And that capital account of $15,000 does contain my revenues and expenses through net income, which should make perfect sense with this guy. If you can see all four of these, revenue, expense, capital, and draw, all melded into one number at the end. And to do that, we're going to learn about something called closing the book, the closing account. But for right now, whoever just said that, what happened to my revenues and expenses? That's what happens.
But you don't want, so I did it, so asset plus, a accounts receivable equal, plus owner's cap. Minus one, so plus.
And right, and plus revenue minus expense is what? Net income or loss. Revenues minus expenses is your what? Net income or loss.
So,
And hence, when you go to this model, beginning balance, which was from, if it was from last period, it was 100 grand. That's all my revenues and expenses for my full time I've been in business. Plus my investments from the whole time I've been in business, minus my draws from the whole time I've been in business. Okay, I see furtive glances towards the clock. All right, I get it. This is, it's a lot. Allison?
We always have to break down how we get the assets.
so we put down,
One more time.
this was what we put down, like what we did.
You're, okay, so to be clear, on Tuesday, I just made work for myself over the weekend. Eight. I know you jump, but I'm not sure that everybody's where they need to be. And the thing is, you gotta give me some points to get everybody put up to the same place. You need to be able to reiterate this process, source documents, to journalize, to post, to trial balance, to prep financial statements. You gotta know what we're doing. Then you're gonna have to tell me the models. We just did them all. Right, balance sheet, P&L statement of owner's equity. Then you're gonna have to spit out this tool. You're not gonna have this whole tool running around with you when you start your first job. Okay. Then you're gonna have to tell me about the four special accounts, payables, receivables, unearned, and prepaids. How do you know what they are and where do they go? And then you're gonna have to do 2 journal entries. We will do that. We will finish going over the homework that we still haven't finished. All these guys, right? E9, E17, and E19. And let me add on one more. So you should have had all this done already, right? All right, so let me add on one more for next Tuesday. And that is P2-1. $74. And just so you see, it says here, okay, prepare journal entries to record the transaction. So you set up a journal and do all these. And then it says open the following ledger accounts and use the balance column format. I don't know, do you really want to set up all those ledger accounts? You know, do you guys all have printers or no? Not really. I was going to say I could put something out there that you on Excel that you could just use. How would that work? If I put up a ledger account on Excel, then you could just copy it and use it. Or if you wanted to, you could print it and do it manually. All right. Okay, cool. So we'll see you on Thursday. This is And then start on your special practice set and connect as well. Because that's due on the 25th. I don't want you to be bored this weekend.
Okay, so right here, like I thought I put all my information in, and then I go out here and it says like it's incomplete, right? So do I have to fill in zeros, or like, does that have to be 0, 0, 0, 0, 0? No. Because it's like 3 parts, and so it could be either.
Your trial balance can't be out of balance, you know that.
Yeah, I had a couple questions on like these two, and I think we kind of covered this stuff today, because it was like,
Good. Yeah, I don't get ahead of yourself. That won't be your friend.
yeah, no, I was just trying to save myself a big.
I get it. Yeah. You bet. Bye, you guys. Happy weekend.